All right, let's go now. Excuse me, for top picks with Christine Poole. Thank you so much, Christine, again for being with us on this Market Call show. Let's kick it off with Brookfield Renewable Partners, which is one of the top picks you brought us today. Why are you so interested in this name?
Yes, so Brookfield Renewable, we think the whole decarbonization is here to stay, and we're seeing it globally, whether it's governments or agencies mandating it, whether it's corporations wanting to decrease their carbon footprint. And Brookfield Renewable is a global player. They have a large presence in the United States, in Europe, across the world. Large player, lots of experience in all the three different power sources of hydro, solar, and wind. Access to liquidity, as I said before when we talked about its parent, very successful fundraising. And Brookfield will also, they will build and develop the asset and then optimize their cash flows and maybe eventually even sell it when it's mature and use those profits to reinvest. And so we just think that they're very well positioned. The Inflation Reduction Act in the U.S. will be beneficial, I think, for the renewable space. And we also have seen in Europe, decreasing reliance on Russian energy, turning to renewables. Brookfield has a presence there. And as well, Brookfield has been looking to get involved in other services in the global transition stage that we're at. They're looking at carbon capture, at battery storage, so other areas of growth. And then finally, it has a distribution yield of 3.3%, and the company targets to increase that 5 to 9% annually.
Okay, let's go to your next top pick, which is Johnson & Johnson, a very familiar name to most Canadian consumers. Why are you recommending this name?
Yeah, so Johnson & Johnson, or J&J, we like the healthcare sector. We think it's a defensive growth sector, so people should have exposure to healthcare in this kind of uncertain economic times. J&J first, balance sheet, very, very strong. One of the few AAA rated companies left in the United States. The other two are Apple and Microsoft. So lots of room, lots of firepower to make acquisitions to grow, and as well they spend a lot of money on R&D. So 70% of their revenues come from products that have a number 1 or 2 global market share. So very powerful brands across all their segments, and 25% of their revenues come from products that have been recently launched in the last 5 years. So they are investing in R&D. Their pharmaceutical division is doing very well. That represents about 55% of its revenues. They're seeing good growth there. And we think that even with some of their major drugs going off patent in about 3 or 4 years' time, the company can manage that. They had a pharma day in November and highlighted 14 blockbuster drugs that have the potential of $5 billion in sales, some of them $4 billion in sales, but most of them in excess of $1 billion. So they're working on that. They're all late-stage pharmaceutical products. And then finally, dividends of 2.7%. So attractive, I think, in this environment. And the company has increased its dividend for 60 consecutive years.
Okay, and finally, a defense name, Raytheon Technologies. Tell us about this stock.
Yes, so it's half defense and half commercial, give or take. The previous company was called United Technologies, and they spun off Carrier and Otis back in 2020, April of 2020, and then merged with Raytheon, which is the defense company. So now the merged company is called Raytheon Technologies. On the commercial side, they provide, Pratt & Whitney and Collins provide engines to commercial aircraft parts, avionics. So that's participating in the recovery of global air travel, because as planes fly more, you need to be serviced. So that's the aftermarket. That really is a nice thing to have when you sell your original engine. They come back for servicing. That business kind of died during COVID because no one was traveling, but we're seeing a big ramp up. So you get to participate in the recovery in air travel through the commercial side. And then on the defense side, Raytheon, they specialize in missile defense systems, in cybersecurity, in space, so good areas. And this analyst day, they were estimating 3 to 4% CAGR growth on the top line. We think that given the political uncertainties and the Ukraine war, that actually could be supported for a higher growth rate.